Hello all and welcome back. Thank you for the love and support on yesterday's video. Seriously appreciate it. If you guys are not subscribed to this YouTube channel though, make sure you are. Also, make sure you follow me over on Twitter. There's plenty more content I'm dropping over there, as well as videos to come in the future on this channel. So make sure you don't miss those out, particularly because a lot of them will involve Hedera releases, such as new product launches, dApps and DEXs, as well as how to make the most of those when they do go live. So big bonus for those of you who catch those early. What's going on with the crypto markets today? So we did see a partial relief rally of sorts into yesterday evening, which has seemed to have continued this morning. Not sure what's going to happen as the US markets continue to open. I will be touching on that very shortly. Also, we'll be covering some more Hedera related news in this video, as well as talking about Solana again, as I did make a video about a week or 2 weeks ago talking about the safety concerns over Solana, and they're back at it again with more issues. Looking at Bitcoin, we are above the $20,000 threshold again. We had a short trip down to the sort of $18,000 to $19,000 level. However, I'm still not 100% convinced that this is relief from the bearish sentiment we're seeing across the markets. In fact, this could be a slight dead cat bounce or a bull trap, if you will, where we will see further liquidations as people open leverage positions again. And we've still got the outstanding leverage positions, which are imminently close to being liquidated as well. So this could still take a massive dive towards the downside. It's one thing to remember, these crypto markets are incredibly volatile, and we do see swings to the positive and negative sides really quickly. Hence why I put a lot of emphasis on ensuring that you understand what you're holding and you have the confidence to hold those positions for the long term. I would not enter these markets thinking you're going to make a quick buck or some quick profit by trying to flip positions in time in the market. It doesn't work that way, unfortunately. There is an awful lot of institutional money within these markets, and you will get wrecked pretty hard, pretty quickly. If I flick over, this was a tweet that I published yesterday evening, if any of you caught that. So Bitcoin is back over $20,000. That was around 10:30 here in the UK. And I said, the real question is it in a real actual relief rally or a bull trap? Regardless, I'm still building large positions in projects like HBAR, XLM, Quant, Link, the likes of those that I talk on this channel about a lot and have provided a lot of information as to why I'm doing it. Jumping across to HBAR, some absolutely massive news dropped a couple of days ago, which I didn't cover in my last video, but is very prudent for me to do so, is that wrapped HBAR has now arrived. So Hashport has deployed wrapped HBAR issuer contracts on the Ethereum and Polygon networks, furthering interoperability. Official contract addresses are below. Hedera themselves recognizes these contracts as official issuers of wrapped HBAR on Ethereum and Polygon through Hashport, but is not affiliated with them and does not sponsor or endorse their usage. Basically, that's saying Hedera recognizes that these are real and they do work. However, obviously they don't sponsor or endorse them because they are not being provided by Hedera themselves. They are being provided by a third party, which is Hashport. However, Hashport obviously do have a very good reputation within Hedera, and some of you may have used that service, particularly if you watch my video on how to port DOGE tokens from Ethereum to HTS or the Hedera token service. Now, what does this mean? This actually means now that Ethereum wallets and Polygon wallets native to those chains can actually buy HBAR directly within those wallets. So this increases exposure for the HBAR token and enables more demand for those tokens across other chains. And as it says here, it furthers the interoperability between existing layer 1 solutions, which is ever more bullish for Hedera itself. Jumping across, let's look at this Solana news then and what's unfolded over the last sort of 24 plus hours. So Solend, the largest lending market on Solana, so basically a decentralized exchange with a lot of TVL, or the biggest TVL, I should say, on Solana, is about to have a crippling liquidation of $170 million worth of Solana that could crash the network. To prevent this, the decentralized protocol is proposing to seize users' funds via governance. Now, a lot of you would probably be thinking this is something that should be banished to the realms of centralized exchanges. However, again, as I said in a very recent video, be very careful of the platforms that you have tokens in. It's not just centralized exchanges you have to worry about. Some of these decentralized exchanges as well can have serious issues because the development teams themselves are over leveraged, maybe not experienced enough in these financial markets, take very strange positions. I mean, look at what happened to Luna itself. You've got someone at the helm that believes that nothing can touch them, ego gets the better of them, and they find themselves over the front of a fire. So there is a large liquidation watch on Solana's Solen protocol where a whale has deposited 5.7 million Solana tokens, which was borrowed 108 million USDC and USDT combined. This alone accounts for a huge percentage of borrowing on Solana, and now this position is under a liquidation threat. The whale is not closing their position. In most protocols like Compound, Aave, Maker, etc., this would result in an on-chain liquidation by de facto. In fact, we have seen many such large liquidations on Aave and Maker recently, and everything has worked as expected. However, such a large liquidation in an illiquid market, so this is another problem with Solana itself, it is a very illiquid market with massive amounts of price slippage or movement due to that illiquid nature of the market, as well as it being unstable, is likely to have vastly damaging consequences. Solana network has already gone down several times and halted half a dozen times. The Solen team explains what could happen to the network. This would cause chaos, putting a strain on the Solana network. Liquidators would be especially active and spamming the liquidate function, which has been known to be a factor causing Solana to go down in the past. So they're openly admitting here, some key developers with the largest TVL on Solana, Solend, are admitting that spamming the liquidation functions on Solana is a reason for the network to go down. And this just seems absolutely ridiculous when you've got key devs saying that there is a flaw in the code itself, or the chain itself, that it can go down from many users trying to liquidate. Crazy stuff. Letting a liquidation of this size to happen on chain is extremely risky. DEX liquidity isn't deep enough to handle a sale of this size and could cascade badly. Additionally, liquidators will be incentivized to spam the network in an effort to win very lucrative liquidations. This is almost like front running for a liquidation, i.e. people will be trying to buy up that sell order as the price slippage takes place, and obviously that's going to then bog down the network even further. This has been known to cause load issues again in the past for Solana, which would exacerbate the problem at hand. To prevent this, they have proposed to literally steal the users' funds and execute over-the-counter trades. So the proposal was to grant power or emergency power to Solana Labs to temporarily take over the whale's account, so the liquidation can be executed by themselves over the counter and avoid pushing Solana to its limits. This would be done via a smart contract upgrade. Emergency powers would be revoked once the whale's account reaches a safe level. When shit starts to implode, all the true colors of decentralization comes out. Another comment at the bottom there, these shitty protocols are run by fly-by-night cowboys who learn basics of economics during the bull run. They put their users at risk by running terrible protocols and do not think about all of the edge cases, but who cares about the risks, right? And that's exactly what I just said. These aren't people from massively financial backgrounds. A lot of them are probably from technical software engineering backgrounds, which is fantastic. They can make these dApps and DEXs work. However, when the economics start going up the Swanee or down the Swanee, everything hits the fan because it wasn't looked into. If I quickly flick over to another screen. So this was the proposal that got voted on to take control with those emergency powers. So Solana-based protocol Solend voted to temporarily control the largest whale account to mitigate liquidation risk. So this proposal went forward. The wallets could effectively vote on the proposal, and it was voted in favor. However, despite this seeming, I guess, a logical way to approach consensus, this is not me agreeing with the proposal itself. It's a logical way to approach consensus in terms of voting from wallets, until you actually look into the details and realize that 90% of the vote came from one single address. Not all decentralization is created equal at all. So you can see this right here. This was the address that provided over 90% of the votes, and they were doing this by moving the tokens between sort of different factors and sort of sending tokens to this wallet address to provide the vote. Absolutely ridiculous that this could even take place. And this is what I mean by not all decentralization is created equal. It's very important to distinguish that. And then here was the other image I just sort of read out. The joke being, fast forward less than 24 hours, and after all of that backlash that's taken place on Twitter and Reddit threads and other forums, Solana-based protocol Solend has just voted again to invalidate the proposal that granted control over the largest whale. So they effectively played the Uno reverse card and pulled the plug on their proposal, which was outlandish to say at best and executed incredibly poorly in the first place to try and protect the protocol. So we could still see a massive amount of liquidations occur on Solana. Based on those points I made in the previous video when I talked about Solana with the scorecard style breakdown of the security of the chain, I wouldn't be touching this at all, as there's potential that this chain could seriously have some more major downside, not to mention it being rendered inoperable by the severe lack of due care and attention of the development team. More points on that video as well. Make sure you check that out if you haven't seen it before. Obviously, it goes over some of those large players in the space, breaking down how poorly run Solana is as a network and how many potential issues, as well as users' funds not being safe on the chain. And then we've got events like this happening where people can effectively vote to just steal everything from your wallet because you are a large whale with a large position that isn't liquidating their trade, but the platform can't handle it. So take that as you would. I steer well clear of projects like that. Personally, talking about liquidations as well, CELCIUS has said stabilizing its liquidity will still take time, and there is still a major risk here that CELCIUS could be liquidated and potentially go into bankruptcy. I believe withdrawals are still held in limbo over on that platform, so users aren't able to withdraw, and we've still got the 3Arrows Capital fiasco happening where they could potentially be liquidated. So again, it brings it back to that same point. Ensure that you have the keys to your crypto and you are not locking up your crypto in strange places, strange dApps or DEXs that aren't secure and haven't been stress tested in scenarios like this. Everything works in a bull run, not everything clearly works in a bear market. Flicking across again to Hedera. So I tweeted out yesterday, and obviously I mentioned in yesterday's video that the source airdrop was taking place, and it was executed with absolute perfection. So the source has been beamed to the wallets almost like a reverse abduction. So seamless, many don't even know what's hit them. Well done to SaucerSwap Labs. The future of DeFi on Hedera is very, very bright, is what I pushed out yesterday evening after receiving my source tokens from holding those NFTs. And all of you guys that did have those NFTs before the snapshot was taken should also have source in your wallets. I've not heard of a single case of this going wrong or miscalculations in the deployment contract that was issued. So it just goes to show how seriously the SaucerSwap team take this, and they're executing everything perfectly as planned first time around with no need to reconcile anything. Brilliant stuff. On the same line of DEXs, we've got HBAR Suites now saying they are officially sold out of round one. Thank you to everyone who invested and for being a part of the community. Announcements are due this week. Thank you for your patience. So we should be seeing a beta run, I believe, of the HBAR Suite protocol DApp/DEX very, very shortly. And I also believe from the recent SaucerSwap Ask Me Anything, there will also be a trial run at some point during this week, potentially on the testnet. However, that may mean that we do see a live version of it go or get released towards the end of this month / the beginning of next month. We are also still waiting on an update from Stader Hedera. They are undergoing their audits for their veto of their platform. However, as it was stated in that interview that's published on the channel, they are really eager to ensure that it's launched before the end of June, as they have been ahead of schedule. HBAR Foundation, excited to announce our latest partnership with Dropper NFT to support their gaming NFT launchpad and marketplace. This platform will work to bridge game developers, players and streamers from Web 2.0 into Web 3.0, of course being built on Hedera. The Dropper NFT launchpad enables a wide range of participants in the gaming ecosystem to launch NFTs with no code with automated solutions. So this obviously helps onboarding, and it reduces those barriers to entry for newcomers to the ecosystem. It is this accessibility that will enable us to streamline Web 2.0 users into Web 3.0. We greatly look forward to announcing Dropper's roster of partnerships for their upcoming launch. The HBAR Foundation is an accelerator of the Hedera ecosystem. Apply for a grant to build with us today, and there's obviously a link there. The HBAR Foundation have been doing God's work on this edge case, or this frontier effectively, of network development. They have seriously been pulling out all the stops with the partnerships and noise and attention they are bringing to Hedera, and it is really starting to pay off with what we're seeing. This is obviously Dropper's website. This isn't their NFT platform, I don't believe. They do clearly have some other services in terms of crypto in, cash out, so basically facilitating payments via crypto rather than cash. So they already have existing services and they are within the crypto space themselves. So hopefully their Web 3.0 NFT low code solution will be a major hit, particularly if it's built on top of Hedera. Wanted to round up this video again, just talking about sentiment in the markets and actually featuring Elon Musk on the channel. So Interesting tweet out from Elon saying he will continue to support Dogecoin. Now, I believe this has come off the back of a recent SEC filing against him for some of his tweets to do with Dogecoin last year, where he was, you know, air quotes, sort of pumping and dumping the markets with the things he was saying in regards to payments, acceptance for Dogecoin, and then talking about Bitcoin, etc. I'm sure all of you are aware of what was happening there. We can obviously see one of the top replies being Altcoin Gordon, saying keep buying it then, with Elon's reply saying I am. So this is some more eyes. Again, obviously Elon being the world's richest man and having a massive amount of Twitter following, as well as potentially having, you know, or will be the owner, the future owner of Twitter if that sale continues to go through as it is planned. And he's pushing out tweets along the lines of I am still buying Dogecoin even during a bear market. Whether he is or isn't, this still draws attention to the cryptocurrency markets. Good or bad, it is still exposure, and hopefully we see some more positive price appreciation over the coming days. Do keep in mind what I said at the beginning of the video though, there is still a ton of uncertainty and a risk off attitude is still prominent. That's not going to stop me from buying up those bags of Hedera, Quant, Link, etc., everything we talk about on this channel. Anyway, guys, if you did enjoy this video, make sure you leave a like, drop a comment if you've got something to say. I do try and respond to as many of them as I possibly can. Until the next one, I'll catch you then. Cheers.